We all remember the incredibly high inflation rates that were caused by the extensive monetary relief packages deployed by almost all major governments of the world because of the pandemic back in 2020. The economic crisis that followed resulted in countries like Spain and the US exceeding the inflation barrier by 7.5%, and that's without taking into account the immense monetary pressure caused by the war in Ukraine that broke loose in February 2022. But what if we told you that there is one country that did not experience this? In fact, that country has not seen the negative impacts of inflation in the last 10 years. The rise in prices has been far less dramatic in Switzerland, a small mountainous nation in Western Europe. Besides making some of the most delicious chocolates and home to some of the most deluxe watches, you can say that the Swiss really know how to excel in various industries and maintain a strong economy. So, what exactly sets them aside? What do they do differently? With price increases up to 5 times lower than its peers, they are in a league of their own, setting a remarkable standard of economic stability and cost control. Let's take a closer look at how inflation works in theory and how Switzerland is an exception to it. As many of you may already know, the central bank of a country is in charge of printing new money, regulating interest rates, and taking measures to keep inflation. But how exactly do they do it? Well, to put it in simple terms, central banks work almost like a company. They have their own properties, they have their own debts, they have their own savings. The central bank works by lending money to other conventional banks and government facilities. The loans are returned with an attached interest rate, and what's even more fascinating is that they may generate profits. And to state the obvious, the European Central Bank made a profit of about 1.6 billion euros. But wait, it gets better. Not only does the Swiss Central Bank make a profit, it also is listed on the stock exchange, and yes, anyone can buy their shares and receive profits every year. To give you some context, Switzerland's central bank now owns more publicly traded shares in Facebook than Mark Zuckerberg, part of a mushrooming stock portfolio that is likely to grow yet further. You see, the central bank has a third way of introducing money that includes buying stocks, gold, and foreign currencies. It then uses these assets to stabilize the currency's value. To put it simply, when the country faces an unexpected inflation period or decrease in exchange rates, they sell off the assets in order to repurchase part of its currency. Using this method, the central bank decreases the amount of currency in circulation and hence reverses the depreciation of its currency. Pretty neat, huh? Well, we're not done yet. Let's take a look at some numbers to understand how much money exactly is the Swiss central bank. Currently, 9 out of 10 Swiss francs are backed by gold. This means that 90% of the value of the currency is supported or guaranteed by physical gold reserves. If for some reason the central bank reserves were to be divided amongst the Swiss people, each of them would have around 114,000 Swiss francs. This not only signifies the country's financial strength and economic stability, but also underscores its commitment to ensuring security and prosperity of its people. But that's not the only reason why the Swiss banking system is one of its kind. We've all seen those Hollywood movies where they portray Switzerland as the tax haven for the rich. Well, this is partly true. They are known for their stringent laws when it comes to confidentiality, despite having no geographical advantages. The history of this astonishing law can be traced all the way back to the Great Council of Geneva. What this basically means is that even though the bankers must maintain a register about their clients, they are prohibited from disclosing that information to anyone but the client, unless the city council agrees with the need to divulge information. It's important to note that while its laws were created to safeguard the wealth of individuals of that time, the banking industry and its secrecy law started to make headlines in international news. You see, while the most of the European nations began to introduce heavy taxes for their efforts in World War I, the Swiss bankers saw another opportunity in that they began to seek out wealthy individuals from France and other war-torn nations, enticing them with the promise of financial secrecy and security in their time of crisis, essentially offering to safeguard their assets from the wartime financial burdens. The landscape legislation in 1934 further went on to make it a federal criminal offense to disclose and engage in sharing of client information. This legislation is also known as the Federal Act on Banks. The country has faced significant scrutiny and criticism for being a tax haven destination for individuals with questionable backgrounds or illicit wealth. That being said, the Swiss banking industry has played a major role in developing the economy, channeling substantial funds into the healthcare and education sectors of the country. The Swiss National Bank reported in 2020 the total banking assets in Switzerland amount to a staggering 500% of the country's entire GDP, leaving most other nations far behind in financial might. This led to a great international pressure for the Swiss to relax some of their secrecy laws, and they did sign some agreements, but the truth in these laws still exists. Under the law, an external authority which seeks to gain access to banking information about a Swiss banking client needs to meet some stringent requirements. Here is a great contrast to give you some perspective. Transparency International ranked Switzerland as the third least corrupt country in the world, while the Swiss banking industry was ranked as the most corrupt in the world due to their strict secrecy laws. Some would argue that the entire concept of secrecy is flawed and should be abolished, especially in an industry that deals in vast amounts of money from all over the world. However, these laws hold historical value not only for the banking industry, but also as a reminder of how Switzerland decided to stay neutral at the time of war and chose a rather unconventional way of providing benefits to the more vulnerable individuals that were caught up between the war. While we discussed some of the more controversial aspects of the Swiss economy, it would not be fair if we didn't mention the incredible achievements they have made thanks to their products and service industry. With almost 12 kilograms of chocolate being consumed per person each year, more than 40 assortments of cheese and more than 200 types of baked breads, one thing is for sure, they prefer quality above import. Companies like Nestle, ABB, Novartis, Roche, Buehler, Schindler, Swatch are all proof of their incredible industriousness. Investing in education sectors and research programs has also been their primary concern, with the country producing some 27 Nobel Prize winners, which are also the highest per capita. They also have the highest national IQ of 102. The fact that they understand that their economy's success lies in their value-added products is not so surprising. Swiss-made products are renowned for their exceptional quality and durability, a stark contrast to the often negative perceptions associated with made in China. They also contribute significantly in the agricultural and pharmaceutical industry. Produce like wheat, sugar, dairy, products are manufactured for domestic and international trade. Another aspect to this is trust. There is trust between the people and the government, and that cultivates an environment of political stability in the country. Unlike in many other countries, a new administration does not come in with the primary goal of repealing what the outgoing government has put in place. The president is selected by an inner council, which is mostly ceremonial, unlike the stark contrast to how presidents are flaunted like kings in many other countries. This also means that government policies are less susceptible to being influenced by private corporations or individuals seeking personal gain at the expense of public interest.